Group revenue in the first half of the financial year increased organically by 15% to 62.3 million, or 17% on a constant currency basis, coming from both the Assurance and Escrow divisions. International revenue, which is mainly derived from the US, has continued to grow strongly and now counts for 47% of the group's total revenue. Group adjusted operating margin was 20%, while reported operating profit was £11.1 million. The adjusted fully diluted earnings per share from continuing operations increased by 6% to 4.5 pence, while reported fully diluted earnings per share was 4 pence. In line with a continuing progressive dividend policy, the board is paying an interim dividend of 1.3 pence, which is an increase of 14%. Escrow remains the cornerstone of the group's profitability and cash generation. All of the Escrow divisions offer substantial margins, a high degree of recurring revenue due to the contract renewal rates, along with a notably strong cash conversion characteristic. Group Escrow achieved strong revenue growth of 4% to reach £15.4 million. Global verification revenues continued the upward trend seen in the second half of the last financial year, and saw an increase of 8% to £3.7 million from £3.4 million in 2013. Group recurring revenues through the renewals process are expected to grow to £18.3 million for this financial year. Assurance revenues rocketed by 20% to £46.9 million. Within Assurance, the security consultancy unit grew by 32% in the United Kingdom and Europe, and by 35% in North America, which is a 41% growth on a constant currency basis. Assurance adjusted operating profits increased by 23% to £7.7 million. The growth of the information security marketplace remains very strong as cybercrime and data breaches proliferate, with reports of corporate breaches hitting the headlines on an almost daily basis. The group now has one of the largest technical security consulting teams of its kind in the world, with over 350 security consultants. The web monitoring performance and load testing business also continue to perform strongly. Looking now to domain services. Within the reporting period, the group completed the purchase of .trust and has seen it progress through the orderly ICANN process to becoming a live domain on the internet. Currently, Domain Services is engaged in detailed discussions with over 30 organisations and brands about joining the gated community. Just after the reporting period, NCC Group reached a suitable financial arrangement to relinquish its interest in the .secure domain that it had applied for previously. On the 20th of January 2015, the division expanded with the acquisition of the Open Registry group of businesses. These businesses will enable the group to offer a one-stop shop providing secure domain services to corporate customers globally. Services include both registry and registrar services, whilst also ensuring that brands are properly protected in the domain world. The acquisition brings with it the management of over 8,000 domain names and a trademark clearinghouse with a centralised database of over 33,000 verified trademarks. With the introduction of over 1,400 new GTLDs in the next year alone, corporates are looking to outsource the registration, brand protection and management of their web presence securely, and NCC Group is well placed in this fast-growing and extremely dynamic market to do just that. The services that can now be offered by NCC Group Domain Services are end-to-end. This is unique in an emerging and confusing marketplace and gives the group a significant competitive advantage. The group remains focused on risk mitigation and delivering client peace of mind by providing a complementary range of services that have the width and the depth to provide multinational clients with a total solution for information security. The approach of all three divisions remains unchanged: to develop the businesses by a combination of strategic acquisitions of earnings-enhancing high-quality businesses with strong organic growth, all focused away from areas of discretionary expenditure. The group's revenue has always been biased towards the second half of the financial year, and this is expected to continue this year. The group's outlook and revenue visibility is very strong, and accordingly the board remains very confident of a strong second half to the financial year.